very strong demand momentum. Ashok Leyland growth was 19%. Eicher Motors, Volvo Eicher commercial vehicle growth has been 35.2%. Tata Motors, surprisingly, has underperformed its peers. The CV sales were absolutely flat, but overall the trend was good. The second big trend, in fact, let's get the Tata Motors management view on board as well. Despite underperforming its peers, they are very optimistic on the commercial vehicle sector. Girish Wagh, who's the executive director of Tata Motors, says that there's a robust demand for heavy trucks required to service the strong infrastructure push by the government. There's increased activity in e-commerce, construction and mining. There's higher replacement demand, advanced buying as well. And the sentiment is very strong. So that's about commercial vehicles. Next, let's move on to two-wheelers. Now, the big trend I noticed here is that domestic growth has come back. There could be reasons for this, but first let's put the numbers on board. Hero MotoCorp, that's why the stock is up 3.5%, is because it's reported a total sales growth of 15% this time around. Of course, on the back of a low base. TVS Motor as well, domestic sales growth was about 22%. Now, channel checks indicate that the reason for this good momentum is because there were supply constraints at Honda's scooter end, and that helped players like Hero MotoCorp and TVS. In fact, TVS's electric scooter iQube has crossed 15,000 units in March for the second straight month in a row, so it's doing very well. And for FY23, TVS has outperformed the domestic mass market two-wheeler industry. Royal Enfield as well registered its highest ever sales of 8.34 lakhs in FY23. But let's move on. The space which has been on fire for the last many months is the SUV segment. And over there, M&M's SUV business has hit an all-time high number with a growth of 31% in March. The auto sector overall for M&M has also done very well because of that. And Maruti told us in their conversation a couple of hours ago that their SUV market share, which is just 11% right now, can grow to 25% by the end of FY24. So that's one pocket which is looking very good. And the final trend, what I noticed, is that X of the SUV segment, the passenger car space, the small car segment, is under a bit of pressure. In fact, Maruti said that there are looming red flags in the auto sector which could dampen demand further, and replicating a 20% growth that they did in FY23 is not possible in FY24. Tata Motors as well has seen a low single-digit growth in the passenger vehicle sales. The growth was just about 4%. So these are 4 or 5 big trends in the auto space. In fact, let's get an expert on this now. Aniket Mhatre, who is the analyst at HDFC Securities, joins in. He's been helpful with a lot of data points as well for the data that I put out earlier. Aniket, thanks for joining us. Of the 4 large trends that I spoke about, which one stands out to you the most? And in terms of specific stocks, how are you positioned now?
Yeah, hi. Good afternoon, Sonia. Thanks for having me on your show. So clearly, as you rightly highlighted, right, the commercial vehicle sector has seen a very strong growth momentum over the last few quarters, and it continues to do very well. Part of this momentum, if you see, is also got to do with the fact that the industry is going through an emission norm change, wherein prices are expected to increase by about 5 to 7% at an industry level. So most of the fleet operators who would be wanting to buy their fleet are expected to prepone their purchase decision, which is also what you're seeing in Q4 numbers for CVs. How the whole sector pans out in Q1 is anybody's guess, but we expect a much softer Q1 overall for the CV space in that regards. As far as passenger vehicles segment is concerned, yes, the overall numbers have started tapering off a bit from a very strong order momentum or order backlog over the last few months. We are seeing the order backlog slowly come off with, of course, production levels sort of normalizing over the last few months for most of the players, and hence we are also seeing the PV space slowly sort of the growth rate sort of tapering off in the last few months. You rightly pointed out Tata Motors has sort of looked at a single-digit growth. In fact, if you remove the EVs from that number, Tata Motors PV sales is actually negative 3% for March. Maruti has reported a flat number, and M&M has done exceedingly well. But even Kia, for instance, has reported a negative growth this month, which is the first negative month for Kia for a long time now. So PVs is clearly sort of decelerating. And two-wheelers, yes, they have sort of seen a good growth, but as we have sort of highlighted, it's also come on the back of 2 things. One is the BS6 transition, which has helped them push a lot of stock in the system. Second, Honda Motorcycles is witnessing significant supply constraints, which is helping the scooter space and also 125cc category in that regard. In terms of stock specific, what we like in the sector is our top picks are TVS Motors, Mahindra and Mahindra, and we also like Maruti Suzuki here. So those are what we are pushing to clients at the moment within the OEM space.
Okay, well, Aniket, it seems as though you've answered all of our questions in one go. But I just wanted to dwell a little further on the entire SUV space and how you would probably approach it going into FY24, because M&M seems to be blazing through, with all-time highs in terms of SUV sales. But Maruti is quite confident in terms of increasing market share as well. So going into FY24, if you had to choose between the two stocks when it comes to the SUV space, which one would it be? Which one do you think has possibly more potential to rise? And your overall approach towards both of these stocks in comparison to each other?
Sure. So just to start off with, we have a positive bias towards both the names. But if you have to compare specifically for within SUVs, between the two stocks, clearly I think Maruti would stand out for the simple reason that it is for the bulk of FY23, it has actually lost market share. You would have noticed Grand Vitara was launched about in October, and they ramped up to full numbers in Q4 only. So the full benefit of Grand Vitara will only come next year. Also, you have the Fronx and Jimny which have been unveiled, but the current sales numbers do not include those. So Jimny and Fronx put together have a 40,000 kind of a order backlog already, and you would have heard, your own channel sort of highlighting wherein the Maruti's management had come in, and they are talking about very aggressive numbers next year. So they sort of want to move back to leadership position in SUVs. In fact, they have also indicated that they want the Nexa brand to be the number 2 brand overall in FY24, wherein this year they are expected to clock around 3,77,000 for the Nexa. Next year that should go to as high as 6 lakh units, which would mean that Maruti will regain the top spot in SUVs in that regard. From 11% market share for FY23, they are targeting 25% market share for FY24. They are already at 18% market share in Q4 as we speak. So they are going all guns blazing to recover back their lost share. And hence between the two, I think as far as UV space is concerned, I think Maruti should possibly do better than M&M, although we expect both of them to gain market share next year.
Okay. I want to come back to the two-wheeler space because you did mention that one of your top picks is TVS Motor, and I get that because TVS has had very good growth, especially in the electric vehicle segment with the iQube, etc., doing so well, and that's the future, right? But I wanted your thoughts on Hero MotoCorp because now I think the rural piece is recovering as well. Hero has benefited from some of the supply constraints that Honda was facing. But then there's also that Honda new 100cc bike that could threaten Hero's dominance in that space. So how do you, negotiate all of these headwinds for Hero? Is it a good buy now or would you stay away?
Right. So clearly this stock has corrected quite a bit and hence valuations are very attractive and we remain positive on the name. But I would not very frankly agree to the view that rural is recovering at the moment because as far as our channel checks goes, rural is still not back to the normal levels. In fact, we are not seeing a pickup in the entry level space where Hero dominates. Hero has almost 80% plus market share in the entry motorcycle category, which is currently languishing. If you look at the YTD up to Feb numbers, right, the motorcycle industry would have grown in mid-teens. But the what has driven growth is 125cc and 150cc, which has grown almost 30%, while the 100cc category is just about flattish on a year-on-year basis, which is where Hero dominates. And why that segment is flattish is because the rural segment is still not recovering. Yes, there are marriages that are ongoing and that is sort of kicked off well, but we at the moment do not see rural segment recovering. some sort of a stock push also at the company level to get benefit of the BS6 phase 2 transition. Also, as I rightly highlighted, HMSI is facing significant supply constraints, which has also helped March numbers. Going into FY24, given that rural continues to languish, we are hopeful that rural will recover in FY24, given the positive sentiments that are there. Reservoir levels continue to be very positive, and hence that should help the agri segment. And hence we expect discretionary consumption to sort of pick up in FY24, which would help heroes entry level category to do well. That's the reason we are positive on the name.
Okay, that's on. All right. Any other thoughts that you want to leave us with? I mean, we had a discussion with Maruti a while back where Maruti mentioned that there are big red flags looming which could sort of drag the industry lower. They're talking about a 5 to 7% growth for the industry in FY24. That's paltry compared to the 20% growth that they did in FY23. Do you think all of that is in the price, or do you think there could be more to go on the downside for the passenger vehicle stocks?
I think the passenger vehicle segment, as I said, has been seeing some deceleration in growth rates clearly, and which is why most of the companies are incrementally highlighting a single-digit growth. But what sort of excites us is that the new model launches from both Maruti and M&M, and hence we are positive on the names. In terms of incremental data points, I think the commercial vehicle space, although as I said, is doing very well so far, I think a lot of it has also got to do with a pre-buy that has helped the CV space in Q4, and we expect Q1 to be relatively soft in that sense, and hence overall FY24 may not be again as strong for the CV sector as it has been in FY23, which is why we remain a bit cautious on the CV sector per se for FY24.
Okay, all right, Aniket, we're going to leave it on that note. Thanks very much for joining in and speaking with us. Could be cautious on the auto sector going forward, but nonetheless, there's definitely a lot of traction coming into specific stocks today within that entire space. We need to take a short break, but we'll get you more on the markets and stock specific.